Homeowners and realtors, this one's a must know before the rates drop. I'm gonna call this the Refinance Playbook. This is meant to tell you everything there is to know about refinancing and a peek behind the curtains. As you know, I built my business around education, transparency, and doing what's right by the clients all the time. So I'm here to basically pull that open and show you guys how refinances work and making sure it actually makes sense for you when you're looking to refinance. When the next refi boom hits, whether that's in 2 days or 2 months, secret, we don't know. We don't know. If anyone's guaranteeing you, run away. You want to be prepared, and when you're going to refinance, you want to make sure they're actually getting a good deal. And I'm going to go over some pitfalls and some things to look out for so that you're not spending tens of thousands of dollars on a refinance without you even knowing to save a few $100s a month. So as we all know, refinancing can be a major game changer for homeowners and investors alike. But that's only if you're doing it the right way. A lot of you buy your home or your investment property with the intention of lowering that interest rate in the future, and I think there's a lot of big opportunities coming. The problem is a lot of us jump into these refinances without fully understanding what you're getting into. What are you actually paying for the refinance? That's the biggest thing that people don't understand is the cost behind that refinance. So this is why you're all about to get hit up with a ton of advertisements. Whether that's mail coming to your mailbox, get ready, it's gonna fill up. Emails, phone calls, texts, you're about to get blown up. The reason is that lenders like myself get paid to originate a new loan. A refinance equals an origination. So we get paid on every refinance we do. So the big thing to look out to with that is you gotta make sure first you're working with a lender that you trust, because a lot of these lenders are literally trying to sell you, not save you money. So let's break this down. How do you refinance the smart way? So everybody tries to time the market. The truth is nobody ever times the market perfectly. So my motto, a lot of other lenders' motto is if you like it, being the interest rate, lock it. The true question is, how do you actually know if you like it? So you gotta ask yourself these 3 questions and ask every lender these 3 questions when you're going to refinance. So step 1 is you gotta get clear on why you're refinancing. Are you just looking to lower your interest rate, tap into equity by pulling cash out, paying off high interest credit card debt? Are you looking to renovate, add ADUs, or lower your mortgage insurance? The biggest thing is you got to get clear on why you're refinancing, and then we can identify what's the best solution for you. So step 2 is knowing that the lowest interest rate does not necessarily mean you're saving the most amount of money. So you might get offered a 3.99% rate, or you're saving $500 a month, but you don't realize that that's coming with a $20,000, $30,000, $40,000 cost. And that could be in points, origination, different fees that are listed on a loan estimate. So step 3, and this is the most important one for you to do when you're looking to refinance. These are questions that you have to ask the lender that you're working with. Question number 1, can you send me a loan estimate? This loan estimate essentially shows you those fees I just mentioned, points, origination, third-party fees like title, escrow. It's gonna break everything down on a 3-page document that every lender in the game has the same exact document. So you have consistency across all lenders. This document was designed so that you can easily compare one lender compared to another. So you're not just looking at the lowest interest rate, but you can compare the rate and the cost associated of each one. Question number 2, what's my break-even point? This is the biggest question when it comes to refinancing. The break-even point is actually pretty simplistic. It's the total closing costs, so all those fees I just mentioned, divided by the monthly savings, and that'll pump out a certain amount of months. If you're looking to break even in 24 months or less, I typically say that's a good refinance. If it takes over 24 months to get your money back, I often say you need to rethink what you're looking at, or there has to be a very specific reason you're buying down or paying that much to get that low rate. Question number 3 to ask your lender when you're looking to refinance is, can you show me at least 2 different options? And these 2 options are minimal what you want to see. Number 1 is a no-cost refinance. So refinances still have costs associated with them. Even if you're getting a low rate where you're not paying points, there's still third-party fees, processing, underwriting. There's fees associated to refinancing. A no-cost refinance essentially is taking just a slightly higher rate than the free rate, and it rolls in all the cost. I love this because that means every time you're going to refinance and you're going to look to do this a few times into the future, you're not adding $10,000, $20,000 in fees every time to your loan amount. Instead, you're getting the advantages of a lower rate and you're not adding to that principal loan balance. Loan option number 2 to ask for is one with at least no points. So you can still have those refinance fees, which are typically $3,000 to $6,000, but you don't want to pay any points at this point in time. Now, this is my personal opinion because I do believe you're going to refinance a few times into the future. And this is why I don't want you paying points to get something you can get for free in another 6 months or a year. I almost never recommend paying points on a refinance unless you're doing it for a very specific reason and you have a long-term objective of those points. A good time to do this was back during the COVID days when rates were at 2%. That's when you want to buy down, when rates are already low and you know you're never going to touch that again. Right now, when we're anticipating refinancing a few different times, again, you don't want to add those points and fees to your loan amount every time. Quick pro tip. So mortgage brokers typically have lower interest rate than retail banks. That's just the way it goes. They're able to shop across the 100 different lenders, and the goal of a mortgage broker like myself is to find you that lowest interest rate at whatever lender's offering it on that given day. If you're not sure if you're working with a mortgage broker, direct lender, credit union, just ask ChatGPT, it'll tell you. These tips are the way to refinance the smart way. What matters most is having a lender that explains everything clearly, gives you multiple options, and actually puts your goals first. So if you want a second opinion, go ahead and DM me or shoot me a call.